My name is Jasmine. I'm the head of the marketing department at American IRA. Oh, it's right at noon. We are perfect. And today we have three special guests, a panel of guests today, and I'm super excited. This is Rob, Clay, and Kim from Shining Rock Equity, who are here to talk about the ASPEN Private Credit Fund. And of course, you're going to talk about all of that in detail and give our audience some nuggets of information and wisdom. But just to put it out there, this recording, it is being recorded, and I'll give the recording out after today's session. So if you missed it or want to share this with a friend who didn't register, you can forward this recording to someone else who needs to see it. And also too, I wanted to just put it out there. We have a disclaimer that American IRA, are not fiduciaries. We are not advisors. So you can't get advice from me as an employee of American IRA, but take this with a grain of salt. This is for educational purposes and insight into what you could do, a possibility. If you do decide to enact upon any sort of business decisions, please consult your own professional, whether that's a CPA, a tax attorney, whoever you think you need to talk to before you enact on any business or investment decisions. And that onus for due diligence is completely on the client. That's what self-directed means. So if you choose to enact on anything said in today's presentation, please do your due diligence, do a little bit more research, dive a little bit deeper before you jump in. And with that being said, we'll let you guys take over. I'm going to turn my camera off. We'll bring in audience questions. If panelists, if you'll look at the bottom of the screen, you should have access to the Q&A tab. So attendees, viewers, if you have questions during today's presentation, if you want to pop those in the Q&A tab, and whenever you guys want to address those, we could do it at the end, or I could help facilitate that. If you want to do it during, that's totally up to you. And you should be able to see all the questions, and the audience will not see the questions until they are selected as being answered. So there we go. All right, cool. Well, thank you so much. I'm taking notes on my handy dandy little paper right here. So I will have questions for sure. And I'm super excited to see what Shining Rock Equity has to bring to us today.
Great. Thank you, Jasmine. Before we get started, I just want to make sure you can see my screen share.
Yes, looks good.
Okay, great. Again, thank you, Jasmine. I'm Rob Stanley, a partner here at Shining Rock. And as an American IRA client, I especially appreciate the opportunity to be invited to present today. For those of you who don't already know us, Shining Rock Equity is a family-owned and operated business based here in Chapel Hill, North Carolina. I'm here with my son, Clay, and my sister-in-law, Kim. Our goal for today is to provide education around private credit funds and to share with you our current investment opportunity, the ASPEN Private Credit Fund. We will start with some brief backgrounds, and then we'll go over some basics of the private credit funds. And lastly, we will detail our investment opportunity, answer any questions, and talk about next steps if you're interested. We also have our own disclaimer, and I'm obligated to provide this to you. We here at Shining Rock are not attorneys, CPAs, or certified financial advisors. We encourage you to consult your own team of advisors. If after the presentation you're interested in pursuing this opportunity, we will provide you a private placement memorandum that outlines all the details, including the risk factors associated with opportunities like this. We will be discussing projections for the fund, but there are no guarantees of performance, and past performance is not necessarily indicative of future. Now, with that, a little bit of background about myself. I have been in real estate for 27 years. Prior to starting Shining Rock in 2022, a large part of that time was spent on acquisitions and portfolio management for institutional investors. My role with Shining Rock includes running the day-to-day operations, developing partnerships, and vetting opportunities. Clay, how about you?
Sure. Thank you, Dad. So I started my career about 5 years ago or so working for a firm based out of Charlotte, doing single family acquisitions for institutional investors really all across the Southeast. And we were deploying about $50 million per month into these acquisitions. And then when interest rates rose, the hedge funds sort of pulled back. And so the firm that I work for based out of Charlotte we started our residential development vertical, and I handle much of the land acquisition piece of that. I'm very much on the financial analysis side of things, which is really what I bring to Shining Rock Equity. I'm usually the one to take a first look at any potential deals. And then, of course, if things get interesting, we come together as a team and decide how to perform our due diligence from there. At the end of the day, our business is centered around extensive due diligence of operating partners and deals. We look through a ton of opportunities to find the one that fits ours and our investors' goals and risk tolerances. Kim, what do you do for Shining Rock?
Hi, I'm Kim Solomon. I've been a full-time residential realtor for 20 years, mainly in the Chapel Hill, Durham, Raleigh, North Carolina area. And I'm excited to be a general partner with Shining Rock, not only to build my own investment portfolio and some passive income, but to bring these opportunities to others. My main role with Shining Rock is investor relations. And Sarah Stanley happens to be my twin sister and Rob's wife. And she is our marketing director, and she handles our website and all of our marketing.
Kim, you want to go over the
Yeah, next.
Yeah.
Here we are. Okay. As Clay was saying, at Shining Rock, we analyze hundreds of deals and are very selective in what we invest in. So this slide shows the 4 properties that we have invested in, and these are all multifamily. We've also, of course, invested in the ASPEN Private Credit Fund. So you can see here that our properties are in Dallas, Texas, Shaker Heights, Ohio, Jamestown, New York, Houston, Texas, and these total 740 doors. All Shining Rock members are also proud to invest in all of the deals that we present to others so that you can rest assured that our goals are aligned.
Very good. Thank you, Kim. So I hope you all agree that we've got a great family team here. As I'm sure you can imagine, our Thanksgiving dinner discussions were dominated by real estate. So it's always a lot of fun here. Seriously, though, we do recognize how fortunate we are to work together for the common goal of helping others and holding ourselves accountable as well. Before I get into what a private credit fund is, I wanted to touch on the deal that we'll be presenting to you. Shining Rock is really proud to be partnering with the lead sponsor, Aspen Funds, to bring you the Aspen Private Credit Fund. One of the most important and serious tasks the team takes on is vetting of each opportunity. Each partner at Shining Rock must agree to invest their own capital in a deal before we will bring it to others. Before deciding to partner with Aspen Funds, we did a tremendous amount of research, fact-finding about the group and their track record. They also come highly recommended from other groups that we know, trust, and already do business with. Later in the presentation, we'll tell you more about the Aspen Fund Group along with the deal specifics. But first, what is a private credit fund? This is a fund that primarily provides loans to commercial real estate operators. These loans are mainly used to finance property acquisitions and value-add projects within those acquisitions. Using the Aspen Private Credit Fund as an example, the partners here at Shining Rock and our investors who join deploy our capital into the main fund that is administered by the Aspen Funds Group. They, in turn, lend those funds to the operators. The funds are an alternative to traditional bank loans. They offer more flexible terms and quicker decision-making for the borrowers. The funds generate returns for the investors through interest payments on those loans, origination fees, deal structuring fees, etc. This slide provides a visual of where the fund's loans typically sit in the capital stack. You can relate this to your house purchase. The senior debt is akin to your home mortgage, and the common equity is your down payment. The difference here is that in larger commercial deals, there is often a need for additional financing to bridge the gap between the two. That's where this opportunity lies. The benefits of investing in funds that provide these commercial loans are priority of payment before common equity. It produces higher cash flow for the investor. And in the case of Aspen Fund, if the borrower does not perform as agreed, Aspen Fund can take over the deal or force the sale of the property to recoup our capital. So that's a little bit about what private credit is. Clay is going to go over why private credit is necessary in commercial real estate markets today.
Yes, let's do it. We can go ahead to the next slide there. So I think it's important to start and understand who else is investing in private credit. And so what this graph shows is a survey of 30 family offices, 19 asset managers / hedge funds, and 28 registered investment advisors. And as you can see, the light blue are those who are already invested in private credit. The dark blue are those who do not invest but plan to in the next 12 to 24 months. And then the yellow are those who are divesting out. And then if you look to the bottom there, you can see that of their portfolio, of their total portfolio, 11% of the family offices surveyed had 11% of their total portfolio was allocated towards private credit. And then asset managers and registered investment advisors are allocating 9% of their total portfolio to private credit. Next slide, please. And so the big story is that there's a tighter credit within the marketplace and a dislocation of capital markets currently underway, really stemming from when interest rates were increased so rapidly. This is even more pronounced in the middle market lending space of $1 to $5 million, which is where the Aspen Fund plays. We'll get into this a little bit more, but because we're playing in that middle market space, we're protected from other liquidity events with the banks. We can lend and get a fair interest rate, but really good return on our loans by lending in the $1 to $5 million space. Next slide, please. And so another one of the main challenges that banks are facing is the lack of payoffs. Sort of like I mentioned before, the banks lended like crazy in 2021 and 2022. And those loans maybe had 3-year terms and they were supposed to mature and the banks were going to be repaid this year and next year. Well, because of the interest rate environment, these loans cannot be refinanced out of. And so the banks are having to extend the loans. And what this means is they're not getting paid back any of that money that they lended yet. And so they don't have any more money to essentially lend. They're low on liquidity, and so they have to reduce their commercial real estate allocations. That allows private credit funds like ours to come in and fill that liquidity void. Another factor here is that the banks are having to adhere to the Basel III Accord, which is pushing more regulation on banks and forcing them to maintain even higher liquidity and capital requirements, along with the increased compliance costs associated with it. What this is causing is a consolidation of banks all across America as larger banks are acquiring smaller ones. Now, I mentioned before that our private credit fund lends in the $1 to $5 million space. Well, when you have all these big banks, they have to push out a huge amount of capital. So they're not lending $3 million. They're lending $25 million minimums, or maybe even higher minimums than that. And so they need huge lending opportunities. That gives plenty of room for players like us to come in that $1 to $5 million space, achieve an even better interest rate in return for our investors, and fill that liquidity void again in that middle market space of $1 to $5 million.
All right.
Okay.
Yeah.
Sorry. Yep. I will touch on the Aspen Fund management team, the strategy, and track record. Next slide. So here you'll see the management team of Bob Frazier, James Mafuccio. Next slide. Dan Schulte and Ben Frazier. You can read their bios later, but rest assured they're a very experienced team with decades of successes in real estate investments. Along with their bios, And more information about these managers and the Aspen Fund, you can check out a full-length webinar recording on our website, shiningrockequity.com, under the Active Offerings tab. And here are the highlights of the Aspen Fund track record, which is very impressive. They have an 11-year track record as operators in this multiple asset classes. To date, they have over 200 million in investor capital managed, over 500 million in assets under management, 11-year track record, and 50 million in investor distributions. They have experience across 4 different asset classes: mortgage notes, multifamily and storage, industrial and retail, and some oil and gas. So again, to recap the unique advantages of Aspen, as Clay was saying, well, they have a decade of experience in underwriting, servicing, and managing credit portfolios. And they also have a proprietary analytic dashboard to monitor their portfolio performance. As Clay noted, they have a competitive advantage in the marketplace by targeting the $1.5 million range investments, and less capital availability allows for better terms and the ability to move quickly on good deals. And they are very experienced in operating these type of heavy value add and distressed deals, and they can take over a deal if needed when other lenders may not be able to do so.
All right, I think Clay's going to go over some of the investments that are targeted through the fund.
Yes, let's do it. Next slide, please. All right, so this is really one of the reasons that we're excited about this fund is as you invest, you're going to get immediate diversification across a few different loan types, with the target portfolio mix being 50% into preferred equity, 25% into mezzanine loans, and 25% into bridge loans. Right now, the fund has been heavy into preferred equity, and then as the fund balances out, we'll start to reach this target portfolio mix. You're also getting diversification among product type. The main property type that the fund will lend on is multifamily, but there's also allocations to industrial and retail to, again, sort of create that diversification piece. This is part of the reason that we feel so good about the risk-adjusted return on this opportunity. We're investing in a lower position within the capital stack. We have diversification across loan types and geographies. And all that being said, we're still achieving a great return and a fantastic return for the low amount of risk that we're actually taking here. Next slide, please. All right, so in a minute, we'll go over some actual deals, the types of deals that the fund will be doing. I think it's important to note that this is not a distressed asset fund, and it will primarily steer away from deals that have any kind of serious distress going on, as it just doesn't align with the risk profile of the fund. We do have the option to lend on those opportunities if a good one comes across our desk, but mainly it's going to be new acquisitions, and maybe it's a situation where it's a quick close and the private credit fund is coming in to provide some gap funding until the operator can refi or sell. Another big one is loan assumptions. Maybe they have a very low interest rate on the senior debt that they're assuming. Maybe it was originated in 2021, but now at this point they have super low leverage. And so the private credit fund can come in, increase leverage for the operator while still having a huge equity cushion that would have to be completely wiped out for our investment to be impacted. And then we can also lend on new construction with very low loan to values. Next slide, please. So this is one of the first deals that the private credit fund invested into. And it's a multifamily deal located in Lee Summit, Missouri, where the Aspen Private Credit Fund provided preferred equity to the borrower. The borrower was extremely experienced with an in-house property management team, so we felt good about lending money to them. Not only that, but the current NOI at the property as they took it over supported the senior loan debt service along with our preferred equity loan. And in this scenario, sort of like I mentioned before, the sponsor was assuming an agency loan at 2.94%, which is just I can't even believe they were giving out loans at such a low interest rate given where we are today. But it was a 2.94% interest loan at 45% leverage, which is really low. So we came in and provided 10% preferred equity at a 14+% interest rate plus origination points with a significant margin to refinance in 3 years. And then one thing I'd like to point out for this one is that we have forced sale rights on this deal. So this means that if the Aspen fund managers do not believe the operator is fulfilling their duties, we can force them to sell so we can recoup our investment and potentially any returns there as well. So it's just another layer of protection. And then on top of that, we've got a 45% equity cushion that would have to be wiped out for our investment to be substantially impacted, which, makes us feel really good. All right, here's another one. So this is an industrial deal in Waycross, Georgia, where the private credit fund provided, again, preferred equity, this time to an institutional level operating group. They've done a ton of deals. And here the loan is generating an incredible 18% plus interest rate. And we still have that equity cushion of 25%. Now, I talked about forced sale rights on the previous slide. For this one, we still have those forced sale rights, and we also have takeover rights. So what this means is that we have the ability, if Aspen does not feel like the operator here is operating the property correctly, or they're not meeting certain covenants, then they can go in, essentially fire them, kick them out as manager, and take over the property. And that's why we're so thrilled to be working with Aspen, because they have experience operating these types of deals. So they can go in, take over a deal, and save it in the unlikely scenario where that would need to take place.
Thanks, Clay. So let's get to the actual opportunity here. I will not read through this entire slide, but I do want to make note of a few points here. Within 3 months of your investment, monthly distributions begin and continue thereafter. Profit share is then paid out quarterly. There is an option to automatically reinvest your distribution, and that compounds quarterly. You will also receive a quarterly report with the fund's performance. There is a 2-year commitment of your funds. After that, you can request their return with a 90-day notice. This opportunity is reserved for accredited investors only, and the minimum investment is $25,000. So for this opportunity, there's actually 2 share classes based on your investment amount. For example, if you invest $100,000 or more, you're going to get a 7% preferred return. And that means 100% of the profits are split among the investors or limited partners until the 7% is met before Shining Rock sees any compensation. After you reach your 7% return, the profit splits are 80-20, 80 to the investors and 20% to us. The preferred return plus that profit split will earn a projected 8 to 11% annually, and that's paid monthly. When factoring in the quarterly profit share, the return grows to 10 to 12%. And then even further, if you choose to reinvest your option, it will earn a projected 11 to 14%. So that sort of sums up the returns for this investment. So again, I'll just go over some of the reasons we really like this deal. Monthly and quarterly cash flow with the option to reinvest. Less risk due to the position of these loans in the capital stack. Only a 2-year lockup. We do have full confidence in the main sponsor, Aspen Funds. All of the partners in Shining Rock and the management team at Aspen invest personally in the deal, which further aligns with the investors. And as Clay mentioned, and because the fund will be lending into multiple projects, markets, and operators, it further reduces the risk. So with that, I will open it up to questions. And unfortunately, I am not able to pull those questions up on my screen. So, Jasmine, if you can
Okay.
moderate that.
Sure, absolutely. Yeah. I thought making co-host would do that, but I guess not. Maybe I just have it locked down.
I'm not seeing it.
First question is, how do you pick your properties? The second part of that question was, have you thought about investing within Triad or the region? I think they mean like the Triangle region, like central region of North Carolina.
Mhm.
So, how do you pick your properties that the fund invests in?
That's a great question, and I'm actually able to see these questions for some
Oh,
reason, so
perfect.
I don't
Okay.
know.
I don't know
Yeah,
what's going on here.
right. But regardless, so within the fund, it's Aspen funds within this private credit fund opportunity. It's Aspen funds making the judgment through their consistent underwriting, and they see a ton of deal flow. So they see what properties are going to be best and protect our position the most. Now, as Shining Rock Equity goes, we also do extensive due diligence on operators and deals, and we are always looking for a deal in the North Carolina area. We're very bullish on North Carolina. We just haven't been able to find one that really meets our criteria. It's either we're not confident in the sponsor or we're not confident in the deal, so we just can't find that mesh there. But we think in 2025, we're going to be able to look at one in North Carolina and be able to offer that to our investors. And then moving along to Wendell's question, are you doing anything in self-storage or only multifamily? So as far as our direct investments into common equity go, we're really only going to stick to multifamily. Now, the private credit fund, what we're talking about here, it does have the ability to lend in self-storage, multifamily, retail, and industrial. And so there is that variety there as well. I don't see any other questions. I'd like to encourage anybody, there's no question that's too simple or anything like that. So feel free to ask away.
I just shifted those to the answered section so that the audience can now see the questions that they've been answered live. Yeah, I had one question. I mean, I don't know if this is necessarily a question for you. I know we're talking specifically about this fund, and I heard you say that this opportunity is for accredited investors only. Let's pretend I'm watching this webinar and I'm not an accredited investor. Do you have any opportunities, maybe even outside this fund, for someone like me? Maybe I have a little bit less than the entry point to offer. Are there other opportunities or something else in addition to this?
Yeah, great question. So for this particular opportunity, it is for accredited investors. For the other 4 deals that we've invested in so far, we have allowed non-accredited investors there. So we do have those opportunities come up. Q1 of next year, we hope to have another opportunity, as Clay mentioned, perhaps the North Carolina opportunity. And hopefully in that case, it will be a 506B where we can allow for non-accredited investors. And just for fun, in case you're not aware of what the requirements are to be accredited, it's $1 million net worth, not including your primary residence, or, and it doesn't have to be both of these, it's just either or, $200,000 annual income, or $300,000 if you're counting your spouses, for the last 2 years, with the likelihood of that continuing. So that's the definition of an accredited investor.
Yep, that's right. And then Eric asked, why not directly go to Aspen Fund, which is a great question. And you absolutely can. So let's talk through the different points there. Number one, if you're investing less than $100,000, that's their minimum. So we can let you in at a $25,000 minimum. Now, if you're investing over $100,000, then the returns, if you go directly to Aspen or if you go with us, are negligible. And so what that looks like is at let's just say a constant gross fund return of 18%, there's a 0.1% difference if you go with Aspen rather than going with us. So 0.1%, it's very negligible. On top of that, our preferred returns are structured differently. So the Aspen guys will offer you a 6% preferred return, whereas we're offering you a 7% preferred return. So with that being said, if for some reason, and we don't think it's likely, but if for some reason the fund was performing less than anticipated, let's say instead of a gross 18%, the fund is grossing 16%, well, you actually come up on the upside with us because we have a higher preferred return. So you'll be earning more. So really, it's pretty negligible either way. We're happy to make the introduction directly to Aspen Funds for you if you'd like, but it's pretty much the same no matter which way you cut it. And then Stephanie asked, who verifies the status? I'm thinking you're talking about the accredited investor status. There's a few different ways you can do that. You can ask your CPA for, okay, good deal. Yes, accredited investor status. You can ask your CPA for a form that confirms your accreditation. You can also go to a website and pay $60 and they'll accredit it. They'll get a form together showing you're accredited, and that costs $60. Shining Rock Equity is happy to take on that cost if that's the route you decide to go. What is the website? Yes, so our website is shiningrockequity.com, and you can watch the full-length webinar with us and one of the Aspen partners under the Active Offerings tab. And then two, as we move into next steps, you can fill out the soft commit form right under that Active Offerings webinar. And that just lets us know that you're potentially interested. It's no obligation, and it'll let us know to send you all the documentation. In addition to that, we'll have our contact information on the next slide. Feel free to email us, give us a call, and we'll be able to answer any questions and get you all the appropriate information. Website for accreditation. Kim, we will send that to you. I don't think we have it handy right now.
Yeah, we'll send
but
it.
We'll send you the link. Is there any calls on this deal? When does the deal close? So the fund was started up in May. And so it's been running, it's been investing and lending money to different operators. There will not be any capital calls on this deal as far as, systematically asking investors for more equity. Yes, Stephanie, we can definitely send you the info. But yeah, no capital calls on this. Once you submit your initial investment, you always have the option to invest more, but it's not like we call capital as needed. We have really good deal flow with the Aspen. The Aspen Fund has really good deal flow. And so there's always a good opportunity for that money to go directly into a deal. We'll just wait a second and see if any others come through. Eric, I hope I answered your question okay there. Just let me know if you have any follow-up questions.
I really love your headshots.
Oh, thank you.
They look great. I'm just like, oh, that looks really nice.
Appreciate it. Wendell, thank you. Appreciate it.
Fantastic.
All right. Well, it seems like we're wrapping up here. So really appreciate everyone hopping on today. At a minimum, I hope we provided a good overview of what a real estate private credit fund is and why it might be a good investment for you. If you're interested in taking the next steps, like I said, you can go to our website, watch the full-length webinar, fill out the soft commit form, or just reach out to us through our email addresses on the screen below. But with that said, thank you, everyone.
Thank
you
you
so
Thank
much, you
you.
guys. Yeah, this has been fantastic. So if you have any questions, there's their contact information. You can reach me marketing@americanira.com. Our next webinar is next week on the 18th. So stay tuned and we'll see some of you back then. And the recording will be released later this afternoon or tomorrow. So thank you, everyone. Thanks. This was really informative.
Great.
Thank
Thank you.
you.
Mhm.
Take care, everyone.
All right. Bye.